Hi, this is Tom Sedlak, General Manager at 33rd Company Property Management. Thanks so much for taking time out of your day to watch our video blog series. Today's topic is the Kansas City Property Management Rental Market Update. Kansas City is a great area for investment in residential rental properties with historically low vacancy, with a low inventory of homes available for rent. I think you'll find that a residential rental will be an easy transition for you, whether you're converting your single family home that you're living in or you're simply going out and buying a home as a residential investor. It's a great time for investors and owners to consider putting additional properties online as rental properties. Right now, the current interest rates are extremely low, and there are still many good deals. Although many of the foreclosures have been picked up and snapped up after the 2008 and subsequent housing market crash, there are still markets out there with short sales, with REO properties, foreclosures, and there are many opportunities. You might have to do a little bit more work to find them, but it's still a great time to be out there finding rental properties, picking them up and converting them into investment properties. As you know, with mortgages, it's also becoming a little easier now to get a residential investment mortgage. If you're not familiar, a residential investment property is a non-owner occupied property. It requires typically 25% down, and also you need to have a reserve. Most mortgage companies stipulate about a 6-month reserve. And basically what that means is for all of your rental homes, if you have 5 rental homes, you need 6 months worth of mortgage payments for all 5 of those homes in some sort of a cash reserve account. If you're picking up your first property, then they're just going to look to have enough cash reserves for one rental property for that 6-month period. But they are easing up a little bit. It's easier to get investment mortgages. That market was really locked up for a number of years, and now you're getting the best of both worlds. Low interest rates, easier mortgages, and still good deals out there in the residential rental market. Homes will rent quickly as well. 33rd Company has seen anywhere from 2 to 4 weeks on average as a time to rent for most residential rental homes. Of course, that's combined with good marketing and with talented leasing efforts, but nonetheless, it's certainly achievable to have a very short turnaround time for your rental homes and have minimal vacancy between tenants. Investors also are seeing increased rents because of the low vacancy and also greater appreciation of property. As this housing market turns around, you're starting to see now multiple, sometimes even double-digit in some metro areas, increases in appreciation of rental properties, and this is good for the investor. Typically, you're going to benefit from the tax benefits, which is depreciation and all of your costs, which are tax deductible, but now you're also going to start to see appreciation creep into your spreadsheets, and you're going to have a much better net return in the end. If you're an individual homeowner considering buying a rental property, probably the best strategy for you is to simply buy a new, bigger home for yourself and take your old home that you're living in now and convert it to a rental. The reason is because you'll be able to take out a residential loan instead of an investment loan by buying a new residential property, and typically that's about 1.5 basis points cheaper to take out a residential loan than an investment loan. And you're going to upgrade to a new house. You already are familiar with your old house, and you bought it for a particular reason, because it has a good layout, because you wanted to live there, exactly the same reason that a tenant would want to live there as well. Hopefully this is helpful. Thanks so much for watching our residential blog series, and we hope you have a great day.